And now this is where things get a little bit scary. You see this trend line I was talking to you about. Months of inventory is increasing. However, your prices aren't decreasing as much. So is there room to go? And that's the question a lot of people are trying to analyze. And this is why I made this video, to have you understand the importance of months of inventory relative to the average price. Hi, my name is Zen. If you enjoy my data-driven and number-crunching real estate updates, be sure to like and subscribe. So TD has revised their predictions on where the Toronto condo market is going to go. So now they're saying that condo values will fall by 15 to 20% from the peak of 2023. So the peak of 2023, I would say, is defined by the Silicon Valley Bank collapse, where fixed rates came down to 4%, and we saw a really big spike in price in about 3 to 4 months, like a pretty large one, and you'll see shortly. Now, where their predictions are changing is that we're going to see 10% of that decline taking alone in this year. So let's see where things have been in the last little bit. So this chart right here, and all the charts I'm going to show you from here on in this video before going forward, is going to start from 2019, January 1st. And the reason why I like to use that is 2019, even though it's 6 years ago, is kind of like the last year I remember where things were kind of normal and what the 10-year average is kind of looking like. So we look over here, just to give you a quick recap, we had the pandemic that happened over here, March. Then we had the spike where the interest rates were really, really low and the people are buying. And then we had the prices drop over here, which was in like 2022. So when they're talking about the peak of 2023, they're talking about right here, which is May 2023. And you can see that from January 23, it was at 629, all the way to May 23, which is 685, which is a 10% increase. And this is what I was talking about. Everyone thought that, hey, that housing correction on the blip was over. Rates went down to 4% from 6%, and everyone kind of dove in. So now where are they right now? Take the calculator out. So we're at 685. Let's say it drops by 20% times 80%. It's going to be $548,000. Where are we right now? We're already at 618. That means we got another $60,000 to drop in total. So this is end of 2025. Because if you look over here at 685, we're actually already dropped down by like almost 10%. Now, why TD is revising this is a lot to do with the fact that there is reduced demand stemming from the trade war uncertainty, slower population growth, which is a key driver, and continued elevated delivery of new condo supply. And when you look at all these three things that they're outlining about why there is a reduced demand, you have to understand two of the things you really can't control. The first one being the trade war related uncertainty. And then the second one is the slower population growth. But what isn't changing are these new condo deliveries, because they're already being built and that they have to close so that, they fulfill their obligations contractually. So the reason why supply is so important is that supply is one of the variables that affects the months of inventory. And I've always talked about months of inventory, because it is the biggest leading indicator of where prices are going to go. And then you can see in this chart over here, this is the months of inventory for the Toronto condos. You can really, really see that things has just been going up. Yes, they may have oscillated up and down. And that's mainly because of seasonality, where a lot of people are delisting and relisting. But the general trend is going up. And to give you some context, in 2022, why prices were going up, we had 0.6 months of inventory. And to conceptualize this for you, why months of inventory is so important is if you take the 1 month divided by what the actual months of inventory stat is, say 0.6, that means that and you multiply that by 100, that means there's a 166% chance your property is going to sell in 1 month. So it's very, very high. And that's exactly why we had a lot of multiple offers and prices went really, really high. And now that you understand the history of the Toronto condo prices dating back to 2019 and the importance of the months of inventory as an indicator of where prices are going to go, this chart right here combines the two and squishes them together. I'm going to give you a history lesson on kind of what has happened. So you can see over here, this is right before the pandemic, where the month of inventory was at 1.2. You can see that strictly over here. And you can see the prices were about 600,000 or 590. And as we got towards the pandemic, people were like, oh no, what's going to happen to condos? Because nobody wanted to be in a condo. So as the months of inventory went up to 3.5, you can see kind of over here, prices went down to 590. So as months of inventory goes up, prices come down because buyers have more choice. They're less likely to give a higher price, and they can usually get terms that they want. And then you can see this oscillation is because we were locked down, not locked down, and then locked down again. But what happened towards the end of 2020 was interest rates got really cut down. And this is where you can see the months of inventory slowly coming down from 3.7 all the way down to 0.72. And you can see over here that the prices went from 580 all the way to 620. So you can see months of inventory and average price are inverse correlated. And as we go through over here, where we now have the interest rate spike like crazy, you can see we went from 0.64 months of inventory all the way up to 3.2. And you can see that the prices went from 700 all the way to 660. That's a pretty significant price drop. And then now I'm going to show you the 2023 kind of peak, what TD was talking about. And you can see interest rates came down, fixed rates, Silicon Valley Bank collapsed, months of inventory went from 3 all the way down to 1.7, and then prices went to the 680. And now this is where things get a little bit scary. You see this trend line I was talking to you about. Months of inventory is increasing. However, your prices aren't decreasing as much. So is there room to go? And that's the question a lot of people are trying to analyze. And this is why I made this video, to have you understand the importance of months of inventory relative to the average price. As you can see right now, we are at 618,000, which is what I showed you earlier, and we're at almost 7 months of inventory. And that's a really, really high number. And now that you understand the correlation between the average price and the months of inventory, this chart here should be a good historic data point on how things look and where prices are going to go based on the months of inventory. So it's a little bit complicated at first, but I'm going to show you how to read this chart. So when you look on the y-axis here, this is basically whether prices are appreciating or depreciating. And you can see this is 0. So anything above the 0 line means that prices are going up. Anything below this line means that prices are going down. Now on the x-axis, this line over here is the months of inventory. So you can see it goes 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And the further along to the right side you go, you can kind of see that more and more of the dots go towards the bottom right corner, which means that prices are coming down. Now, this chart is using all of the national data, so there's a lot of data points, but I want to use this as an illustration for you to see maybe where TD's idea of prices coming down another 10% is going to be. So I showed you in the last chart here that the months of inventory right now is at 6.89. So if we map that onto where we are over here, it would put us squarely somewhere along this line in terms of where prices should be. So you can see there is still a cluster of properties here where you can still see prices going up. However, you do see some clusters of prices coming down over here, which is down to 10%. And I think this is probably a data point that TD may be using right now. So the importance of this thought over here is to illustrate that at the current month of inventory that we have, we can see prices drop that amount. But here's the other thing about this chart. You can see that we have a lot of price drops even in this cluster where the months of inventory is anywhere between 4 and 6. And we're well over 4 and 6, which is technically a balanced market. So for prices to drop another 0 to 5% is very much within the realm of possibility. However, this chart points to that there's more data points to suggest that we may be flat a little bit or a tiny bit of appreciation at 6 months of inventory. So depending on how you read the data, you can interpret it in either way. Now, rather than predicting where prices are going to go, I tend to look at where months of inventory is going to go. So right now, demand is very low for Toronto condos. While some first-time home buyers are entering because they can set a new floor, the inventory is still increasing from what I can tell and from all the phone calls I am getting right now. So should we expect months of inventory to continue going up in this direction? The answer is yes. Because if you look at this chart, and even though a lot of these pre-constructions will be coming onto the rental space, the sentiment for condos right now isn't really great. This is why there's 2 lines I've highlighted here that are very important. I agree with TD and their analysis. Looking to 2026, TD expects the market to be firmer, but says chances of a heroic rebound appear slim. That means I really do not think that we're going to have a massive rebound or turnaround or correction back to the upside of where the condo market's going to be right now. And the reason really is we have to see months of inventory get down to at least below 2 right now. And for that to happen, you effectively need sales to triple meaning that for a month of inventory to come down, you need sales to triple or the amount of new supply to come down by a third. And you can see from the previous charts, I do not think we're going to get any less supply anytime soon. So what do you think the chances are of sales tripling when, if historically in 2019, the 10-year average, half the condo buyers were investors and half the condo buyers were end users, and half of those buyers, the investors, are nowhere to be found? I don't think the sales are going to triple for that reason. And you can see TD says it directly here as well. As of now, population growth is expected to slow, investors are unlikely to return, and prices are likely to remain within the unaffordable range for everyday buyers. So the question that I'm going to layer on top of all of this is, if we have all these completions coming online, all of these investors are putting on the rental space, we already know that they're going to be cash flow negative anywhere from $500 to $2,000. The question becomes, at what point will some of them capitulate? Or at what point will some of them sell? So to answer that question, I'm going to look at leases for condos. And you can see over here, if we were to look at the 2019, call it the 10-year norm, we're somewhere between 2,000 and 4,000 active listings, so on the market available for someone to rent. And then when we had the pandemic and nobody wanted to live in the condo, we got as high as 9,000. That's quite high. And then when we had the highest prices increase, we saw that the active listings went all the way down to as low as, call it, 1,500 or so, right? So yeah, 1,200. And now we are hovering back at 5,400, which is a very, very high amount. And with more pre-constructions coming, I suspect we're going to start seeing this chart go in that direction. So what do you think happens to prices when there's a lot more choices? On top of the fact that the economy is slow, where people aren't trying to move out and they're trying to bunk together, you got it, prices are going to come down on rental side. So we've been telling a lot of our clients that at the peak of the market in 2023, we're down probably about 10%. So specifically in condos, you're looking at $2,800 for peak rental prices, and now you're down to $2,500. That's actually more than 10%. Do I think there's more room to come down for rental prices? Absolutely. So to answer the question I posed prior, how much longer can investors hold out knowing that we have a surplus of inventory on the rental side, rents are coming down, even though rates are coming down, they're not going to be coming down that much more relative to how much rents can come down. And we have immigration slowing, which means that the prospects of them breaking even on their investment, let alone being less negative, is going to get worse and worse. The question becomes, how long can they hold up for? And my answer is, I don't think it's going to be that long. So when those things start happening and we have a lot of people selling, that's when we're probably going to start seeing the price come down. So when I pose this data to a lot of people who are calling me about whether they should keep their condo or not, I would say more than half of them are leaning towards selling their condos as opposed to keeping it on the rental market and hoping that in the next 2-3 years, there's going to be some kind of appreciation that makes their cash flow negative worthwhile. So the question becomes, can you wait out at the minimum of 5 years so that you can, at the very minimum, see this high months of inventory start coming back down to start seeing some appreciation? Because I really don't think we're going to have this months of inventory go back down to where we need it to for prices to start going up. Call that between the 3 and 4 months of inventory kind of territory. So if you can survive 2 to 3 years and you can hold the condo for, call it 5 years, it makes total sense. And this is why a lot of first-time home buyers are entering the market right now. However, as investors, if you don't want to wait 5 years before you call it break even or start seeing money, a lot of investors are saying, hey, you know what? I'm going to just sell my condo, realize what gains I have right now, and then move it to something else, a better performing asset. And if you want to understand why a lot of people are choosing to sell the condo right now, it's because a lot of them are choosing to move into the freehold space because there's more scarcity there and prices are actually moving up slowly because the months of inventory is actually around 3 and 4. So that trade going from a condo to a freehold makes a lot of sense right now. So if you want to understand the dynamics of that and why making the upgrade from a condo to a freehold makes a lot of sense, make sure to check out this video over here. Until next time, your move, your future. See ya!